Here with me on set is Bill Smead, Chief Investment Officer at Smead Capital Management. What a day to have you here, Bill. Welcome.
Oh, thanks for having me.
Look, you've got historical knowledge better than anybody. What do you think as you watch this play out? Opportunity to get in the bank stocks? Do you think this is an obvious kind of problematic macro event? We talked about how, I guess, inflation still remains your top concern. Well,
free money created a lot of ignorance and a lot of ignorant investments. And so you're going to go through this rolling set of bear markets to punish the sins of the prior episode. So this particular banking episode is closely associated with the insanity that was going on in startups, in highly leveraged private equity investments, things that were fed by free money. But what's interesting, in our opinion, people are worried about the banks. I'm more worried about the people who have suckled on the startup world, the vendors to the startup companies.
Sure.
No one's talking about, hey, cloud services slowing down. Well, yeah, every time you close up the funding on these startups, they're not going to be cloud hosting. They're not going to be doing digital ads. They're not going to have things brought to them by Amazon, and they're not going to buy Apple devices as fast as they were when people were funding them.
But let me ask you something as a value investor, knowing that this is somewhat cyclical. Why not buy some of those cloud businesses or look at Apple and say, okay, here's an opportunity. They're at a down point in the cycle, but I want to own it for the next 10 or 15 years.
Fantastic question. I made fun of eBay in '99. Somebody would go online and buy a once-used Callaway driver for half price, and they'd get so excited they'd go on their online account and buy 300 shares of eBay, and it would go up 10% the first week they owned it. And so I made fun of that. And then in '08, we ended up buying a whole bunch of eBay at $11 a share with $3 a share in cash. Owned 100% of PayPal,
wow.
Owned 30% of Skype, owned all of StubHub, and 5 of the 6 largest classified advertising firms. And we made a ton of money on it, but that was 9 years later, Kelly. So that's what everyone's forgetting here. There will be bargains, but Munger called this financial euphoria episode that peaked in 2021 the biggest of his career in totality. He said, which means it was like 7 different financial euphoria episodes going on simultaneously.
So why aren't you more bearish? Because everybody who shares that view goes, the obvious shoe falling episode is yet to happen. The economy's going to crash. The yield curve is telling you that. Inflation should be the last of anybody's concerns. So I wonder why you're not more bearish about where the market's going.
Great question again, because these are rich people's problems. Venture capital is for rich people. Private equity is for rich people. Alt investing is for rich people, that even if they lose the money, it's not going to change their behavior. The average person in America is seeing their wages go up a lot.
But can that remain to be the case when you have the most sort of profitable parts of America in deep recession?
No, because they don't have the multiplier effect.
Yeah.
So you know that we're big fans of the home builders, and we own the home builders. When people are building houses, the carpenters and plumbers and electricians and painters and roofers, and there's such an ecosystem of multiplier effect. When Apple does their thing, their capital spending goes outside the country, and the bartender in Palo Alto has to live in Stockton, and the maids that are at the most expensive hotels in Palo Alto, they live with 11 relatives in Sacramento.